Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, things seem to be on the up economically in China, but not elsewhere. But first, inflation in the US has virtually disappeared. In their June update, however, there's been some key shifts, with food prices up 4.5% over the year, rents up 2.4%, and medical costs up 6%. But petrol prices declined 23%. American retail sales rose 3% last week from the prior week, although they're still 5.5% below the equivalent week a year ago. Still, that's the first week in a while where the week-on-week trend isn't lower. US earnings reporting season has started with reports from three major banks. They provisioned almost $28 billion for bad loans in the June quarter, a mark only surpassed in the last 3 months of 2008 during the depths of the GFC. The total was higher than analysts had expected, with all three lenders saying their economic outlook had deteriorated as the pandemic continues to rage through the US. They're all bracing for a coming wave of defaults by companies. And in about 2 weeks, the roll-off in additional crisis support in unemployment checks will start, triggering new pressures on households. And China's merchandise trade surplus fell in June, and by more than expected, but for the rest of the world, the signals are relatively positive. Their exports were expected to fall 1.5% year on year, but in fact they rose 0.5%. While that was encouraging for them, the suppliers to China with their import data was even more encouraging. Imports were expected to fall by 10%, but actually rose 2.7% year on year. China is supplying some impetus to world trade at present. Their overall surplus fell from $63 billion in May to $46 billion in June. For New Zealand, they recorded a deficit with us of $945 million for the month. That's a surplus for us. But with the US, China's trade surplus actually rose to $10.4 billion in the month from $9.3 billion in May, as Americans just can't stop buying from their arch rival. And the growing trade is extending into July. Total cargo throughput in China's 8 major coastal ports increased more than 12% in the first 10 days of July from the same period a year ago, boosted by strong imports of commodities including crude oil and iron ore. And while Australian business confidence rebounded in June, continuing improvement from May, the current levels are still negative and have risen to levels that are still very weak. And the re-emergence of the pandemic risk isn't particularly encouraging for July. US Treasury 10-year yield is 3 basis points lower at 0.61%, and the gold price is holding at $1,809 an ounce. And oil prices are holding as well, but marginally lower today. They're now just under $40.50 a barrel in the US, and the international price is just under $43 a barrel. But the Kiwi dollar is almost 0.5% lower at just on 65.3 US cents. We're also 0.5% lower against the Australian at 93.6 Australian cents, and against the euro we're down 0.5% as well at 57.3 euro cents. That means our trade weighted index has fallen to 69.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.